What is up, everyone? It's Bob Freeman here to present you with free information, live and for free. So, today we're talking about the European economy, for the most part, and I'm just starting this off by showing you where this information is coming from. It's coming from the European Commission, and right here, the main indicators, the ESI, EEI, sectoral CIs, you want to download this file from the European Commission's website, the seasonally adjusted data for total sector. And this file will be a really, really, really big file, I'll be honest. It will give you, one second, I'm scrolling to, it will give you the composite number for the European Union, and it will also give you specific numbers for the European Union, as well as numbers for different countries in the European Union, and also numbers for the Eurozone. I'll get more specific. Let's see. The ESI is right here at the top. It tells us EU, ESI, and that's just a composite economic sentiment indicator. So that's just a composite number of how the economy is doing. And BUIL is for building industries, like construction industries. RETA is for retail trade. CONS is for consumer sentiment. SERV is for services. And INDU is for industrials. Now, it gives us numbers for each of these categories for the European Union, but it also gives us numbers for the Eurozone, which is, the European Union is, it's a unionized group of countries inside of Europe, but this doesn't necessarily include every single country in Europe, whereas the Eurozone does, for the most part. And then you see next to the European Union and the Eurozone's information, we have different countries. Now, it gives us a lot of different countries, and putting this information together is a lot of work. But I did do it today for you when this information came out. It came out this morning. I was not able to get it all put together before the market opened, so I wasn't able to put any very specific bets on the sector while the market was open. But I mean, when the data came out for the European Union, it told us since March, this report came out, for the data in March, it said 99.9, which is right below this trend line. So for it to reach this high above the trend line in just 1 month, that's a very, very large change. And also just the change breaking above the trend line for European Union economic sentiment as a total, I did I did place kind of a lot of positions just for Europe as a conglomerate. So conglomerate as a whole continent. But I just wanted to make that disclaimer that might not be right for you to do for yourself, but that's just something I did this morning. Actually, before the market opened, during pre-market, based off looking at this data very quickly. Now, after the market closed, this morning I had school, so I had a lot of time that I couldn't work on this. It's part of the reason I wasn't able to place any more specific positions. But what I will do is, well, I'll just start with the European Union. Give you an example. So I'll plot the total economic sentiment as well as the different components of the economic sentiment indicator. So you can see that EU industrials, very good. Services all time are not good. Long term, probably don't want to invest in European service companies, but in the short term, it looks good. This component, at least, of the European economic sentiment indicator looks better than it normally does. Consumer sentiment looks good. Retail, trade looks good. I mean, I looked at the data this morning and pre-market, everything just looked really good for the European Union. So I went ahead and just made that bet. That's my disclaimer. So it might not be right for you. I think it looks very good. So good that I personally placed a trade. Now, I will not only do this for the European Union, but also for the individual countries in Europe. So that way I can compare them together and also compare them to the European Union as a composite. Because like I've told you in previous videos, our goal is really not to just do as well as the sector, or not the sector, but the market, like just the general. In this example, we're trading the European stock market. We would want to do a little bit better, or just better in general, than the European stock market would be our goal. But this morning, I'm not going to lie, I got a little bit lazy and just saw that the European stock market was doing well. I didn't see anything specific because I didn't have time to do my own research, so I just placed a bet in the European stock market because the European stock market looked good and I wanted exposure outside of the United States stock market. So, as you can see, this is for Denmark. DK is for Denmark, and we can also see the categories for Denmark, similar to the categories we saw for the European Union. And what I'll do is I'll link these. I'll take the change of the month over month, and then compare each country's change month over month together, along with the European Union and the Eurozone. I will show you how that looks. So here, this on the bottom is for March, the data for the month of March that came out last month. And then on top is the data for the month of April. And what this is telling us is the percent, not the percent, but the amount of change in the numbers for each country month over month. So it will tell us just how well each country did as in total that month, how well that country did as an index. But then also it'll tell us how different industries in that country did that month. And if we save this information, we can also look at how well the countries did in the previous month, according to the economic information, not just looking at the price chart of the country as an index. And I'll show you an example right now of how this could be useful. So we see that the European Union and the Euro area are in the middle, whereas Finland, Denmark, and Belgium have had more growth in their economic sentiment indicator that month. So if look at Denmark, Denmark interested me the most because although it did underperform the European Union and Euro area in March, it did much better in the month of April, and it not only did better, but it outperformed all of these countries that were not outperformed, but it just grew more than all of these countries did that were growing more than it the previous month, like Austria and Germany. So just by looking at that, I mean, it just kind of told me, look at the Denmark graph and compare it. Look at the Denmark graph of their economic sentiment indicator and compare it to the price of the Denmark index in the stock market. So I have it pulled up right here. And we can see this first month that I kind of drew on with some crayons for the month of February. Since the first day in February to the last day in February that the stock market was open, the Denmark ETF EDEN went down about 1%. And if we look on the Denmark economic sentiment indicator for that month, it will show us that there was contraction. So it would make sense. It's still below this trend line, and it's showing contraction. So it would not make sense to have bought this at the end of February when this data came out. You would not have wanted to buy it right here. I mean, as you can see, I mean, you could have bought it and made 1.5 holding from March 1st through March 31st, the entire month of March, you would have made 1.5%. But, I mean, by looking at this data, you would know, like, it's not going to go up very much. And in the month of March, at the end, when the data came out, you could see that Denmark was just barely, it's just almost to recovery on the trend line. Their economic sentiment is in the month of March. And we can see in the recovery where in the chart, in the price, where there was starting to be a fall, and then there was a recovery. The same thing that this is showing us. But since it's not above the trend line, it's nothing really to get excited about, in my opinion. But now, we see this month, the month of April, Denmark's economic sentiment has broken above the trend line, and it's growing very fast. In fact, we can even see that Denmark's economic sentiment is growing faster than every single other country in Europe, except for Finland. And if we look at how Denmark is doing, how their index is doing, how their stock market is doing, we can see in the month of April, this month, for the data that came out today, that told us that Denmark outperformed the European stock market in every country in Europe, as far as growth is concerned, outperformed them in the month of March. It grew a lot. It grew a lot in the price, and it grew a lot in the data that came out at the end of the month for Denmark. So, by seeing this direct correlation between the price of the Denmark ETF and the Denmark Economic Sentiment Indicator. One second. I did not see this when the stock market was open today. I looked at this information after hours. But looking at it now, I'm already feeling good about the European economy for this month. Seeing the Denmark numbers compared to the European economy, I like them a lot more. And there is more risk with investing in the Denmark ETF versus just the European stock market ETF, because Denmark is just one country, where the European Union ETF is you're investing in multiple countries. So, but as a result of seeing there's more growth in Denmark's economic sentiment in comparison to the European Union for the month of April. Although you might be taking on more risk by buying Denmark ETF versus European Union ETF, the risk is, in my opinion, well warranted, because this is the FTSE Europe ETF, which just tracks the European stock market. And in the month of April, thus far, it has only increased a little bit under 6%, whereas Denmark, for the month of April, their stock market has increased over 8%. So while it might not look like a lot percentage-wise, as far as your risk is concerned, you're gaining roughly. I personally, I'm expecting, if I were to invest in the Denmark ETF, I would expect roughly 20, 30, 40% more return compared to the Europe ETF. Although it's taking on more risk, it's giving you a lot more return comparably. And also seeing on the RSI, the momentum being very high. Denmark ETF just looks very good to me. Just seeing the strong correlation between this and the Denmark ESI and the strong momentum, I'm just playing this as a momentum play because I feel good about the European stock market. I feel good about the Denmark stock market, and from what I've seen on the price charts, other people are starting to feel the same way. Like if we go back, well, we can just see in the European stock market, in the month of April, it's the price is definitely breaking out of a range, and it's getting to a price where people are just going to keep bidding it up. I think, not promising that, but that's exactly what it looks like to me. And because everything is doing so well in the data for the European Union, I have no reason to think people wouldn't keep bidding the price higher. And by seeing the same thing in Denmark, this month, it breaking out of this range with even more momentum than the European stock market makes me feel very good about Denmark in particular. So that's all I wanted to say as far as the European economy is concerned for this week. We'll talk more about it next week. It will be super awesome. This is one of my favorite reports. It's just a lot of really awesome information all together for just a lot of economies at once. I really like this report. So, more information that came out today. There is information that came out today about the United States stock market. We have initial and continued jobless claims. It's actually my favorite report. The last one's not my favorite. This one's my favorite because it comes out every week. I look at it the most. So, we saw last week that initial claims reached the lowest point since COVID lockdowns had started for the second time in a row. Well, this week, It happened again. You can see it. You can see it here for the Change Weekly, and right here on the graph. We have had the lowest initial claims for unemployment insurance since COVID lockdowns have started for the third week in a row. And I have not seen this on any news websites yet, but also I don't really watch the news, so it could be on the news. I don't really know. This continued claims, I do not really like how it is looking, to be honest, but until we see it really, really go up, or we see it stay flat for 2 or 3 months, I'm really not worried about it because of these initial claims. And by looking at this information that comes up every week, we can predict what the Institute of Supply Management's employment numbers are going to say as far as growth in manufacturing and growth in services for this month, the month of April, because this information comes out first. And we can see for the 3-week change. So this started the last half of the last week in March and ended. And so from the time frame from then till February or April 24th, the past 3 weeks, initial claims have dropped 28%. There's 28% less people initially filing for unemployment insurance this most recent week than there was 3 weeks ago. That's a very big change. Very, very good. So I think the economy still looks very, very good in the short term in the United States. Obviously, I feel the same way about Europe, as I had explained earlier. In the short term, very good. The economy looks very good. But it's still important to keep your eyes open and not be stupid, because anything could happen and the economy could just go back down. So it's important to look at all pieces of the economy, so when something starts to go wrong, you can catch it and brace yourself before terrible things happen. So this information will also, not so much the jobless claims, but other economic information that I share with you on my YouTube channel, like the European Economic Sentiment Indicator, will help you to generate ideas as far as trading stocks are concerned. Not so much. I mean, it will also help you gauge the general sentiment of the economy. It will help you get a better idea of more specific things in the stock market for what you want to invest in. So, I feel like this was kind of a sloppy live stream. I apologize. I did not prepare well for this at all. But I hope you enjoyed all of this information, and I hope that I encouraged you to look at this information for yourself and download it off of the European Commission's website, because it's free and anyone can do this for themselves for free. So, on that note, hope you all have a great rest of your day. We have a great weekend. And next time I come on the live stream, it will be for the Institute of Supply Management's Purchasing Managers Index, the report on business for manufacturers. it's one of my favorite reports. So excited to do that one. Hope you're excited too. So I will see you then. Goodbye.